Hi everybody, welcome to another update on Stock Screener. I got a request to look at Arrow Exploration. Looks like it's going up, so that's a good chart. Looks interesting. So what does this company do? It's an oil and gas company. I have not looked at it yet, so this is all new. First of all, we go to the presentation. And of course also CDAR. And then we take the balance sheet. That's the first thing that we do. Take the balance sheet. And the latest earnings. And from here, we can already see SG&A expenses at let's say 2.3 per quarter. So 4 times 2.3. Oil and natural gas royalties 1 divided by 8.6 is 12%. Let's say 12% royalty. Yeah, we already have 12% here. Share price 0.29. Shares outstanding. This is from February. So where are the shares? Shares outstanding 303 million diluted. So 87 market cap. So it's a bit higher. Okay. Let's take a look at production. Colombia. That's red flag. I don't like Colombia. 550 to 3,000 within 18 months. Okay, so how much do they have right now? January was 1,800. Okay, so 1,800. Then they will do some drilling. So 3 times at each we'll add, so 3 times 300, let's say 1000, and this is 2000. And then let's say 500, so 2500, and let's say 3500. 3500, so 3500 plus this. And that gives 5300. Oh, and here it says 3000. I'm not sure why this is 3000, because when I add it, then it's more than that. Probably there's some decline rate, but okay, let's take 3000 then. Very weird, but okay, let's take 3000. If they say 3000. Oh, so here they have 6 additional low risk wells. So probably when you add those, then you could go to the 5000. Let's take 5000. 7.9 million barrels, 2P reserves. So that's 8 million BOEs. 8 million BOEs. Isn't that very low? That's very low, 8 million. Doesn't make any sense. Yeah, that's very low mine life, because it's 8 million and you produce 2 million, so that's 5 years mine life. That's not a lot. So life is 5 years. $2,000 BOE per day. Yeah, that's this one. Net back 57. Very cheap price to cash flow, but we need to look at capex. So I added this all up and gave 5,000 barrels net. which is actually a lot. Capital is 32 million. So this is Colombia, 12% royalty, quite a lot of taxes, 35% tax. So take this into account, that's a very high tax. So yeah, this is not a lot of reserves. And Frontera is near us. So this is Frontera Energy, and Arrow is this one. It's not guaranteed that they have the production, of course. But let's see. Well cost is 2 million. Per well capex is 2 million. Good payback. And 360 barrels per day. That's very good. Looks like it's all oil. I've not heard of any gas. No decline rates. Oh, they also have Western Canada. So was this in? Where was the 10 well program? This is gas. This is a gas play. At 1000 VOE per day, that's not a lot. Because it's gas and gas is going down. So the gas, let's just leave it out. It's not important. I think the oil is more important. So let's take a look at the latest earnings. So the production was 1,500 and now it's 1,800. 56.7 net back. Yes. 7 million working capital. So there's some cash. 11 million. So no dilution. That's Canada. That's Colombia. A lot of data. So natural gas 1,900. Crude oil 1,100. So there is some gas in it, probably 20%, 20 to 30%. Net gas didn't give a lot of net back, so that's bad operation. This is better. And it's using ICO even. So revenue was 3.16, a lot of operating expenses. So very bad. For crude oil, we had 90. $90 in Q3, net of transportation. And operating expense 6.24. Okay, so let's take 7.3 and operating expense 7.55. $73, and here we take 73. And 86 was the WTI price. Not sure how much this will grow, so let's just take the same numbers. Okay, so revenue, costs, interest. Do we have interest expense? Yes, we have interest at 123,000. That's not a lot. Let's add everything to that. So let's say 200,000 times 4, 1 million. And that's not a lot. The debt, 24 million. Quite a lot of debt. Debt to equity is 1. Not sure what derivative liability is, but it's debt. Okay. So I think we have our numbers. Costs at 7, revenue at 73, royalties and the capex is very high, but this is a very aggressive growth. Not sure what the sustaining growth is, but yeah, how much is it sustaining capex? I don't know. Okay, I don't get any data on that. So let's look at this only. So at the current production level, this is overvalued, yeah, because of this capex. But let's say we remove the capex, yeah, 2,000 barrels per day. I think the capex on that is not that high. Maybe 5 million. So actually we are fair value. But with the growth that we have, the possible growth, you see that there is upside from 80 to 300. That's 3x, 3x, 4x. Yeah, it's a pretty good company. If they can get to this production with this capex, then there is upside. So I'm using this production, yes. Capex, SG&A, costs, interest, and 5x free cash flow. Now, don't forget there's 35% tax. Income before tax, and there is income tax here. So this doesn't have tax pools. So we need to take into account some of these taxes. So I would just do times 65% because of the 35% tax. This is to account for the tax. So then the upside is less. The upside is only a double if they successfully drill all those wells. It could be bad wells, so then it could be 4,500 instead. And then there is only 50% upside. So it all depends on those wells. And currently, there's not a lot of upside with the current production. So let's look at the net earnings that they have. 2 million, so that's 8 million per year. 8 million per year with a market cap of 80 million. Okay, it says United States dollars, so yeah, this is not Canadian dollars. So we need to do some changes. They are making it difficult for me. So probably this is all US dollars as well then. Yeah, United States dollars. Okay, that's all US dollars then. Replace. Okay, let's see. What do we need to change? I probably need to look at the oil price in Q3, but in US dollars. Yeah, it was about 88, so that's correct. 73. Yeah, this is not correct. Share price 0.29 because this is in CID. So let's look at the pink sheet then. 0.2474. Okay, so we have the market cap. This is all in US dollars. This is in US dollars. So no problems. Okay, so what's the upside now? It's about the same, 75 to 200, a double, or depending on the production, could be a double or no, double or triple. Not bad. Only problem is low life and Colombia. But other than that, this looks like a good company with upside in drilling. Costs are pretty low at 7 with revenue at 73, so that's a very high margin. Very high margin and a very high growth. That's almost a triple in production. That's possible in only 1 year. Yep, good candidate to buy. Yeah, that's a triple. At $100, it's a quadruple. Okay, I don't see any problems in this company. It's actually rising very fast. So in 1 year, it went up by double. So going from 0.2 to 0.3, that's 50%. And will probably keep on going up as this is mostly oil. So it was 80% oil, I think. Yeah, about 80% oil. Yeah, 75. So that's also good. And this 10 well program. So 3 will be spudded in February. What about the other ones? But of course, this is initial oil. This will probably decline, and I don't know how much it will decline. They don't give any guidance. Yeah, they say 3,000. So probably I should take 3,000 because that's what they are saying here. Probably we won't get to the 5,000 because that's initial oil. So let's take 3,000 and here add some growth. So then we get this. So now the situation is not looking that great with the 3,000, 3,000, 4,000. Let's say we take the average, then this is actually fair value. If we take 3,000, and that's this number. Yeah, not looking that great with these numbers. Okay, good candidate, but I don't think I'm going to buy this. It's also in Colombia, low life, taxes. 2 million per well. Prospera has 1 million per well, but of course this is 360. Yeah, okay. I think that's it for this video. Interesting company, but not for me. I'll see you next video. Bye.